Welcome back to the Daily Crypto Roundup. Today, the market has taken another hit, and this is not one of those days where we can just say, Bitcoin dipped a bit, don't worry about it, and move on. There is more going on here. Bitcoin has fallen back toward the $62,000 area. Ethereum is down around the $1,600 area. XRP is trading around $1.10. Solana has dropped back below $70. And across the wider market, we are seeing liquidations, fear, ETF pressure, and a strange altcoin signal that looks bullish at first glance, but is actually warning us that Bitcoin weakness is driving the whole story. So today, we are going to walk through this properly. First, we are going to look at why Bitcoin dropped after briefly looking stronger. Then we are going to explain the liquidation flush and why leverage made the move worse. After that, we will look at the so-called altcoin-season signal, because this is one of those headlines that could easily mislead people. Then we will move into XRP, because while the token is under pressure, the fund flow story is still strong. Then we will cover Ethereum Foundation staff cuts, because that raises real questions about leadership and direction. And finally, we will look at the Clarity Act in Washington, because regulation is still one of the biggest long-term drivers for this market. Before we get into it, quick mention for Kraken. If you are looking to buy Bitcoin, XRP, Ethereum, Solana, or you are just building your crypto position over time, check out Kraken through the link in the description. Kraken is one of the most established crypto platforms out there, and if you use our link, it helps support the show, helps keep Crypto News Today going, and helps us keep doing giveaways for the community. As always, this is not financial advice. Do your own research, never invest more than you can afford to lose. But if you are going to use Kraken anyway, use the link in the description, and we will send you 20 XRP for signing up. Just message us once it's done. Right, let's get into it. The main story today is Bitcoin falling back toward key support. Bitcoin had looked like it was trying to recover after the US-Iran headlines helped ease some geopolitical pressure. But instead of turning into a strong risk-on rally, the move flipped into profit-taking. Traders who had bought the bounce started taking money off the table. Oil prices moved lower, and the broader market mood shifted from relief into caution. That is why Bitcoin slipping back toward the $62,000 area matters. This is no longer just about whether Bitcoin can reclaim $65,000. The market is now asking whether Bitcoin can defend the lower support zone. Around $62,000, you have the 200-week moving average coming into focus. That is one of the big long-term levels traders watch because it smooths out years of price action and gives you a sense of whether Bitcoin is still holding its broader cycle structure. If Bitcoin can hold this area, then bulls can argue that this is still a painful but controlled correction. But if Bitcoin loses this zone cleanly, then the conversation changes quickly. The next levels people start watching are closer to $60,000, then the June low around $59,200. And after that, some long-term indicators start pointing much lower. And that brings us to the next Bitcoin story. One long-time indicator suggests Bitcoin may need to fall further before a proper bottom is confirmed. The key idea here is realized price. Realized price is basically the average on-chain cost basis of all Bitcoin in circulation. Historically, in major bear market periods, Bitcoin has often traded below realized price before forming a lasting cycle bottom. Right now, that realized price is around the $53,000 to $54,000 area. So the argument from this indicator is not that Bitcoin must definitely crash there tomorrow. It is that if this really is turning into a deeper cycle reset, then Bitcoin may not have completed the full capitulation process yet. That is not a comfortable thing to hear, but it is important. The market does not care about what we want. It cares about liquidity, positioning, demand, fear, and whether buyers actually step in at key levels. And today's liquidation numbers show exactly how fragile positioning had become. CoinDesk reported that more than $700 million in leveraged positions were wiped out across the market in 24 hours. Most of that came from longs, meaning traders who had borrowed money to bet prices would rise. Bitcoin and Ethereum accounted for a big chunk of those liquidations, and altcoins like XRP, Solana, and Hyperliquid also took heavy hits. This is why leverage is so dangerous in crypto. A spot holder can watch Bitcoin fall and decide whether to hold, buy more, or step aside. But a leveraged trader does not always get that choice. If price moves too far against them, the position gets forcibly closed. That selling then pushes price lower, which triggers more liquidations, which creates another wave of selling. That is how a normal pullback can turn into a flush, and this is why we have to be careful with every bounce right now. A green candle does not automatically mean the market is healthy. Sometimes it just means leverage got cleared out and price is trying to stabilize. Now let's talk about altcoins, because there was a signal today that could sound bullish if you only read the headline. A Glassnode altcoin cycle indicator has moved deep into altcoin season territory. Normally, that would get people excited. They would say, "Here we go, alt season is starting." But this time, the reason behind the signal is very different. Altcoins are not strongly rallying. Bitcoin is just falling faster. That is a massive difference. If altcoins are outperforming because capital is rotating into them and prices are rising, that can be a real alt season setup. But if altcoins are only outperforming because they are falling less badly than Bitcoin, that is not the same thing. That is not strength. That is relative survival. So today's message on altcoins is clear. Do not mistake relative strength for a confirmed alt season. A real alt season needs Ethereum, XRP, Solana, and the wider altcoin market to start moving because buyers are actively rotating into them. It needs volume, it needs momentum, it needs risk appetite. What we are seeing today is more defensive than that. Some altcoins may be holding up better than Bitcoin, but the whole market is still under pressure. Now, XRP is where the story gets more interesting. XRP is trading around $1.10, and price action is weak today along with the rest of the market. But the fund flow story is still one of the stronger altcoin narratives out there. Bitwise says its XRP exchange-traded products in the US and Europe have now seen more than $200 million of year-to-date inflows. That matters because it shows regulated demand for XRP exposure has not disappeared, even while the token itself is under pressure. This is the important distinction. ETF inflows do not guarantee that XRP price goes up immediately. They do not remove volatility. They do not mean XRP cannot fall with the rest of the market. But they do show that some investors still want exposure to XRP through regulated products. That is especially important when Bitcoin ETFs and Ethereum products have been seeing pressure. If XRP-linked products are still attracting capital while the wider market is weak, that gives XRP holders a real narrative to watch. But again, price still matters. XRP needs to defend the 1.10 area. If it loses that level, the chart starts to look more fragile. If it can stabilize and push back above 1.12 and 1.15, then the fund flow story becomes more powerful because price would finally be starting to confirm the narrative. Until then, we have to separate two things. The institutional demand story looks encouraging, but the short-term chart is still under pressure. Now let's move to Ethereum. The Ethereum Foundation is cutting around 20% of its workforce, reportedly eliminating 54 positions as part of a restructuring. This comes after months of leadership changes and senior departures, which makes the timing sensitive. On one hand, this could be framed positively. The foundation may be trying to become leaner, more focused, and better aligned around Ethereum's long-term priorities. A smaller, sharper organization is not automatically a bad thing. But on the other hand, Ethereum is already under pressure. The price is weak. Solana continues to compete aggressively. Layer 2 fragmentation is still a debate. And now, with staff cuts and leadership exits, people are asking whether the Ethereum Foundation has the right structure and momentum to lead the ecosystem through the next phase. That is the key issue. Ethereum is not just a coin, it is a whole ecosystem. It needs developers, institutions, Layer 2 networks, applications, policy engagement, and clear leadership. If the foundation is restructuring because it is getting more focused, that could be constructive. But if the market reads this as instability, then it adds to the pressure around Ethereum. Finally, we need to talk about the Clarity Act. This is one of the biggest US crypto regulation stories, and right now, its path through the Senate still does not look clear. The bill is important because it is supposed to give the crypto industry more structure around market rules, agencies, DeFi, stablecoins, and developer liability. The problem is that several difficult issues remain unresolved. There are political questions around government officials and crypto ties. There are DeFi concerns. There are law enforcement concerns. There are arguments around stablecoin yield. And there is a tight legislative calendar before Congress heads into its summer break. Why does this matter for the market? Because crypto needs clarity. Investors need to know what rules apply. Builders need to know whether they can launch products without being crushed later. Exchanges need to know who regulates what. And institutions need confidence before putting serious capital to work. So if clarity keeps getting delayed, that does not destroy crypto. But it does mean uncertainty stays in the system longer. And markets hate uncertainty. So where does all of this leave us today? Bitcoin is under pressure at a major support zone. Liquidations have flushed out over-leveraged traders. The altcoin season signal is not as bullish as it sounds because Bitcoin weakness is driving the reading. XRP has a strong fund flow story, but price still needs to stabilize. Ethereum is dealing with a serious foundation restructuring, and US regulation is moving forward, but still not cleanly enough to give the market full confidence. Today's message is simple. This is not the end of crypto, but it is also not the time to pretend everything is fine. Watch Bitcoin around $62,000. Watch whether it can reclaim $65,000. Watch XRP around $1.10. Watch Ethereum's reaction to the foundation news. And watch Washington, because regulation could still become one of the biggest catalysts of the year. As always, stay calm, protect your downside, do your own research, use the Kraken link in the description if you want to support the show, and we will see you at the top.